Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 3:30 in New York. It is Monday, November 2nd, 2015, and this is the daily report for gold and silver. We do have gold trading lower on the day, currently off approximately $6 or 0.5% lower at 1135.10. That's with a low of 33.18 and a high of 42.99. Now, interestingly enough, when we look at the dollar index in essence unchanged today, 96.93. So when we look at the price of gold in terms of dollar strength or normal trading, the predominant downside that we're seeing is due to trading 670 off due to normal trading, 50 cents off due to a strengthening US dollar, that all according to the Kitco Gold Index. Now, in as much as gold is trading under pressure today, as I said, off about 0.5%, 0.6% as we can see right now, it is faring the best in terms of the precious metals complex. Palladium, for example, is off about $25 on the day, almost a 4% drawdown. Definitely in the lead for percentage drawdowns on the day. When we look at silver, silver's off about 0.75%, and that's trading about 11 cents lower on the day. And then finally, when we take a look at the platinum market, platinum is off almost a full percent on the day. So if you recall from Friday's weekend review, my sense we would probably see a continuation in the selling come the beginning of the week. We base that on a couple of different studies, but primarily we were looking at a Japanese average chart. And on a Japanese average chart, it will really give you an indication of strength of trend by looking at body size, because of course body size is based upon the midpoint of the prior candle. So what I want to do now is to go ahead and convert this standard candlestick chart into our Japanese average chart and see what information we can glean from it today. And I've done just that. And as you can see, we were looking at this relatively large body size compared to, of course, as the market's consolidating, and you'll see them almost form these doji-like candles. What we can make of today's activity so far is you do have good body size. So it doesn't show a diminishing in trend. Also, when we look at this single candle right here, you'll notice that it has the absence of any kind of upper tail or wick. And simply what that says is that as this market opened, midpoint is going of the prior candle is where we fix the open. And what this candle says is that at no time during the trading session did price action actually go at or above the midpoint. That's what would create these upper, in a red candle, that's what would create these upper wicks. Lower wicks not as important. It simply says that the low that it's created, it has come off of that low. So in terms of what we're looking at in straight Japanese average charts, is that this trend has not diminished, and we don't have any real indication, of course, that we're getting any kind of bottom activity. One also needs to realize that the one fact about a Japanese average candle chart is that it lags tremendously behind any kind of activity because it's average base. So we'll have to go back to our standard candlesticks to glean more information. So traders, I have done just that. We've converted back to a standard candlestick chart. And what I want to focus on is different levels that we could possibly find some sort of support. As you know, on this particular chart here, I have two fib retracement points, but only one that's really one that we want to effectively look at. And that covers the ground from these recent lows at around 1080. I think I have it fixed at 1076 right here, up to this top that we have at 1192, the high of the last rally. And when we do that, we get different fib areas, meaning 38%, 50%, and 61%. Those are the ones that we want to focus on, because what we are looking at in terms of our Elliott wave count, of course, the long wave count, is looking at the fact that this concluded a third wave and that we're in a fourth wave down. That would be our major count. You're looking at the intermediate count just behind that. When we do that, there's a couple of areas we want to look at. Now, we are just at this 50%, which typically is not an area where you will find support, but we certainly could. That sits at around 1133. Market's trading at 1134. So if we were to get any kind of a key reversal, a candlestick pattern, whether it was a piercing line as you get here or an engulfing bullish as you get here, other areas will give us that Three River Morning Star variation. But if we saw something like that appear, that would tell us that we could be looking at a potential key reversal area. So traders, I've just drawn in what that would look like. Now, I certainly am not as of yet anticipating this, but this is the first area that we want to look at. So for example, in engulfing bullish, we would have either a lower or equal open on the day with a higher close, really taking away the entire body of this prior daily candle, meaning today. That would be your engulfing bullish, and your confirming candle would come on the following day with a higher high and a higher low. But traders, as I said, we really have no technical confirmation in any of the categories that we look at that would indicate that this is the bottom. And I set forth the criteria just now that would really realistically change our current vantage point, because my sense right now is if we do not hold this area, call it roughly 1130 to 1134, if we do not really bounce off of this area, we're going to obviously head lower in the next logical spot, which would be a full-blown retracement, meaning a 61% retracement from this drop. So you had this major rally come in, takes us off of these record lows. And I say record lows because it's the lowest that gold has traded to since trading at 1900 and falling down. So you have this move of roughly what? You've got 1070 to 1170, over $100, a typical nice rally in gold, and then a correction that comes in at 61%. That would be a logical point also, and more likely to look at for a key reversal, and we would look for the same types of patterns, whether it's engulfing bullish, whether it is a piercing line as we get here, or any of the other variations that are typically candlestick patterns and telling us that we've got some sort of key reversal, we would look to act here. Now, my sense is with the market under pressure in the way that it is, we're flat. We got in the market at 44, we got out at 88, market is trading well below that, so we're simply looking for a point to re-enter. If that point isn't here, meaning around 33, if we don't form a base and find some sort of support, and when we look at this historically over this last period since, call it May and August of this year, and we look at key areas, and let me go ahead and highlight these in red, or in green, excuse me, so you can see what I mean. But when we look back in time at this level that we're at right now, which is 50%, you can see that it doesn't really show us that you had key levels here. There's no real bottoms or tops. You can almost ascertain this and this area as a bottom, but that's not that strong. When we move that over, of course, and look at the 61% retracement, well, we do see a couple of areas that make a little bit of sense. You've got this area right in here, in which you had the key level here at 1120 be resistance, then it pops up. When it comes back down, it finds support again at this area, comes back up, and you can see this is a consolidating area that we hit before trading lower. So we do have some historical data that shows that this particular level, meaning 1120, is a much stronger level in terms of, historically speaking, finding support or resistance. And because of that, my sense is that it's more likely that we will not hold this particular area. I could be wrong, but it's more likely we will not hold the 1135, 1133, 1132 area, and more likely than not drift a little bit lower, finding some support, which I believe at this point could easily come at our retracement level, the 61.8% retracement level at, call it 1120, 1121. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.